What up, nerds? My name is Luke. I help people who are interested in crypto generate passive income and grow their wealth. And today we're going to talk about the big topic, getting rich from crypto. It might be that most people get into crypto because of this, the idea of getting rich, and if it's possible. So, the big question, can I get rich from crypto? And honestly, the short answer is no. You're not going to get rich from crypto, or at least I'm not going to get rich from crypto. But a more long and nuanced answer is you can make money from crypto. That's true. You definitely can make money from crypto. But the goal shouldn't be trying to get rich. It shouldn't be trying to flip an NFT and make $1 million. It shouldn't be trying to get 1 million percentage returns in a year. It's people get confused and think it's all about Lamborghinis and going to the moon, and that's a part of it and that's fun, but the real goal of making money is growing your long-term wealth. Or it doesn't even have to be your long-term wealth, it's just growing your wealth. The goal is to grow your wealth. It's not about getting rich quick. So this is what I call the path of the tortoise, the slow compounding growing wealth approach. And see, you can see Master Uguay here from Kung Fu Panda. He's the epitome of the way of the tortoise. Look how happy he looks. He's like 400 years old. He's about patience, wisdom, and a slow progression. And if you look to the left here, you see Charlie Munger and Warren Buffett. That's Charlie Munger on the left, Warren Buffett on the right. These are the human incarnations of the path of the tortoise. These guys are like 90 years old. They've been investing for decades. They're both billionaires. Look how happy they look. Look how chill they look. That's the goal. And this is my goal, at least. So, can you make money from crypto? Yeah, maybe you can't get rich, but can you make money? And the question is, of course, right? And there's a couple of places people have made money and continue to make money. And you probably heard about most of these. You have investing, you have trading, and trading is the short-term buying and selling of cryptos. You buy low, sell high, or short when it's going down, buy when it's going up, and try and make profit. Investing is, I guess, more of a long-term approach. In traditional finance, investing, with the Warren Buffett type characters, you're investing for 15 plus years. Obviously, crypto hasn't been around that long. So long-term in crypto is closer to the range of about 1-2 years. Anything longer than 1 year is, in my mind, if you're trading longer than 1 year, it's basically investing. You also have DeFi. DeFi is different than the other two. You're not trying to profit on the change in price of something. You're not buying Dogecoin. Hopefully it goes to the moon. What you're doing is you're placing your assets to try and get yield, real yield. And that's from anything from lending to get some interest, or putting your capital up there for people to trade with, and then you generate fees. So anything related to this on-chain is what I call DeFi. And the final one is your kind of, your experimental DeFi protocols, your on-chain Ponzi schemes, and these, they don't really generate real yield. Where the yield is coming from is from other people who play the game. It's very PvP, and that's why I consider more like gambling. I wouldn't really advise this now, but that's not to say I haven't delved in these things. So if you want to make money, you have to have some sort of way to make money. So you need an edge. And what is an edge? Well, in a game like poker, if you know that game, you can't make money, right? You're playing against other people, but it's a zero sum, meaning no value is being created. So this is different than investing or DeFi, where there's no new value coming in. In fact, the only value that's there is the money that people put on the table. So in order to make money, you have to have some sort of edge above the other people there, the other people playing. If you see this guy, this picture of Daniel Negreanu, probably one of the best poker players alive. And he's made millions of dollars playing poker, and he might not be considered one of the most technically proficient players. You know, he's not the Magnus Carlsen of poker. However, he does have a massive edge over the people he plays, and that's what's most important. The metric for a good poker player, in my opinion, is the amount of money you made, not how good at the game you are. I mean, you can be, you know, a strategic genius, but if you don't make much money, you're not very good at poker. It's all about the edge. And I believe it's the same thing in investing and trading and cryptocurrencies. You have to have some sort of edge, or else you're just going to make, I mean, the market returns, which may or may not be zero. So just give you an idea of some possible edges. You have an access edge. That means you can invest in things that other people can't. You might have an informational edge, meaning you know things that other people don't know, and you can use that to your advantage to make money, obviously. There's a technological edge, and this is kind of more like, you know, it's more in the realm of execution. So if you have bots that are faster than other people's, if you have computers that can crunch numbers faster than others, this is a technological edge. You know, in most cases, this doesn't come up. Mostly comes up in arbitration and trading. And then finally, you have an analytical edge. This is when you can execute the same as other people. You have the same information as other people, but you can use that information better. Whether you can get better insights from the same information, or you can generate those insights faster. So I'm going to go through each of the different places in crypto where you can make money and talk about the different edges, just to have an idea of whether or not you think you can actually make money in these different realms. And I'll go from worst to best, in my opinion, for me. First one up is the gambling, Ponzis, and other kind of experimental DeFi protocols. Now, these things, I'll give you an example of the straight Ponzi, and this is where you put in money, and then they generally guarantee you some flat percentage return per day. If ever you see this, if you see put in money now and you get 1.5% or 5% per day, that's almost definitely a Ponzi, and it's a kind of a transparent Ponzi. So first things first, you have to understand the game you're playing. You have to understand that it's a Ponzi, it's PvP, and it's actually negative expected value to play these games. Because not only are you losing money to fees, you're also losing money to the people who were in the Ponzi and played the game before you. So where are the edges in these kind of gambling, Ponzi, PvP type protocols? Well, number one edge is access, right? You want to be the house, because the structure of these Ponzis, a lot of them anyway, are such that if you're the first one to invest, then you can't lose money, right? You only make money from more people joining the Ponzi after you, so you can't actually lose any money. So that's huge. That's the number one edge in these things. You want to be early. You want to be first, right? Not even early. You want to be the first person. You want to be the house. You want to be the person who set up the Ponzi, or you want to be generating fees from the Ponzi. Now, honestly, I would say don't do this. It's semi-immoral. As long as everyone knows it's a Ponzi, I mean, anyone can play the game. Everyone's willing, right? But it's borderline. It's quite borderline. The second edge is informational edge, right? In some less obvious, transparent Ponzis, some of the ways you lose money, or some of the ways the house makes money, is knowing when the major players are going to sell. This is the same with pump and dumps. You could put pump and dump into this kind of type of edge, where if you know when the house is going to dump, if you know when the major players are going to sell all their coins, and you can get out first, and you can make money like that. It's similar. If you know when someone's going to rug a protocol, just take all the money and run, then you can use that to your advantage. So this, again, informational edge, huge. And finally, the analytical edge. This is if you can analyze the game better than other people, if you can calculate that even if it is a negative expectation game, is a negative sum game, just like poker, just like gambling, you still may have an advantage over the other players if you can analyze a little bit better. But that, I mean, compared to the first two edges, it's quite a bit smaller. So generally, I would say avoid these things. I wouldn't class them as investments. They're, negative value. But if you like gambling, if you like the game, you could do it recreationally and consider it like an expense, like paying for Netflix every month. It's not a real investment. So don't consider these things as part of your portfolio. Next, we look at trading. Trading is just the buying and selling, right? You can buy and sell the actual assets. You can buy and sell derivatives like BitMEX. These are futures. You can Deribit as options. It's all trading. But here the edges are, first again, informational edge. If you have information, things that other people don't. I mean, in crypto, it's not fully regulated, and I'd say in the smaller coins, there is probably a lot of insider information that you do not have access to, that you're not going to find out. And if you don't have access to this, then you're playing against people who do. It's risky. It's not something I do because I know I don't have access to this kind of information, so I don't try and play these games. Don't try and trade against these guys who have that edge. Similarly, you can have a technological edge. This is if you're good at arbing, you have good systematic strategies, you have bots, and you have the best technology. But even if you have good technology, you're going to be playing against people who did this in the traditional finance space. You're going to be playing against people who've been doing this for decades. And it's pretty tough, right? If you're not a professional, if you don't have a company and a team behind you, you likely don't have the technological edge. And I for sure do not. I don't even try. And finally, analytical edge. Again, analytical edge is always there. If you can analyze these trades better, if you have a good thesis, if you can use information better than other people, you can have a bit of an edge. Again, smaller than the other two. Next, investing. Investing, and this I'm considering all types of investing. This could be buying Bitcoin, it could be buying altcoins, it could be buying NFTs. Similarly, trading, you can also trade NFTs. Anything where you want to buy and you're basically going to sell it longer than a year's time, or you're going to hold it for even longer, is investing in my mind. With this, the edges are access is one of the major edges. If you can buy tokens early before other people can, and generally in bull markets things go up and you can buy them at huge discounts, then you have that edge. So you'll see a lot of VCs have a bit of an edge over other people. If you're in the know, if you know the people making the NFTs, if you know the protocol directors, if you know the people who create these coins, then you can find out when it's going to launch. Maybe you can get in before it launches. And this is a massive edge in a lot of these types of smaller coin investing. Obviously, this is not the case for Bitcoin and Ethereum at this stage, but people have got in super early to a lot of these things. So you just be wary of that. Be wary of this this kind of edge that other people have. Similarly, information edge. Again, insider trading, people in the know, the big boys share information and they won't necessarily tell you. So these investing is quite difficult in cryptocurrencies. I mean, it's not impossible. It's a little easier than trading, I believe. Definitely easier than making money on these Ponzi schemes. But again, it's you have to understand your edge. Do you have an edge, and where are you getting your information and access from? And similarly, I haven't got it written down, but analytical would also be an edge here. If you can analyze the investments better, if you have an idea of where things are going to go in the future, if you have better hypotheses than the next person, then you can make money this way. And finally, DeFi. Now, in my mind, DeFi, this is the place where I make money. This is the place where I feel most people can make money. Why? It's because the edges are not as difficult and they're not as elitist as in the other ones. I mean, the whole idea of DeFi is decentralized, it's permissionless, it's all transparent. You can see everything on chain, you can read the code yourself. So you're not really losing out on an informational advantage, right? You're not losing out technologically because it's often slow, right? You just invest and every day you get paid your returns, your fees. So what are the edges in DeFi? Well, I believe access is one of the major edges, similar to investing. If you can get in on things that are high value that other people can't, then the market can't correct the value. And actually, this is where I feel small people have an advantage over people with massive amounts of money, right? There's plenty of places in DeFi where you can find really high returns, but maybe the maximum amount you can put on it is only a couple of hundred, maybe it's only a couple of thousand. But if you only have 10,000, then that's a significant portion of your portfolio. You know, getting 50% on 10% of your portfolio is huge. But someone who maybe has $1 million to invest, or some of these guys with tens of millions to invest, or some of these funds with even more, they're not going to look at these options. They're not even going to bother because it's such a small amount of money that they can place. The amount of return they get isn't worth the time to do the analysis and put on the investments and looking after these things. So if you have a small amount of money, you can actually perform much, much better than some of these big guys in DeFi. So keep that in mind. The next big edge is analytical. Again, most of the information is out there. Everyone has access to the same information. And if you can analyze it better, if you have a better idea of the risks and how things can go, how things are going to change in the future, and how much potential returns you're expected to make, then you have an edge over someone who's not going to do it. And this actually brings up the idea of an ape, right? In crypto, you know, people say, oh, I'm an ape, I'm aping into something. And that's generally meaning they do put in little thought and they just put their money on something where they think they're early, because there's shown to be value in getting in early in bull markets. Similarly, when something has momentum, if something's going up, then it's probably going to keep going up in a bull market. So people just throw their money out there. So if you do a little bit more analysis than some of these apes, if you take the slow, deliberate way, if you take the path of the tortoise, then you have an edge over these apes in these markets. So maybe you are not investing in these things that are actually lower value than someone thinks, or you're finding these small investments where people haven't jumped into yet, which have really high expected returns. And I actually truly believe that anybody can make somewhere between 2 to 50% returns per year using DeFi. So finally, this is YouTube. So, you know, I gotta say it. If you like this, if you've found some value, or you're interested in following the path of the tortoise, then, you know, like and subscribe and keep up with more content to come. And I'll try and help you. If you're getting returns, try and increase those returns. If you're not, if you're new to DeFi, getting in, investing in your first DeFi protocols, and just trying to grow your wealth together. Thank you.